All right. Welcome to another episode of the Map Your Money podcast. So our usual host, Arish, is in Savannah celebrating his Irish ancestry. I mean, Arish is only one letter away from Irish, so figure that one out. But today we've got we've got a very esteemed guest. Let's just put it that way. We've got Matthew Jarvis, host of the Perfect RIA Podcast. So welcome, Matthew.
Yeah, thanks so much for having me. Appreciate the title of esteemed guest. Well, hopefully I'll keep it throughout the episode.
It took me a second. It's been a long day. It just did not roll off my tongue. But
you're good,
Matt
man.
Matt was kind enough to invite me on his podcast to talk about, advisor stuff, building businesses, systems, processes, that sort of thing. And when leading up to that podcast, his assistant kind of gave us the prep call, and she asked what I'd like to talk about, and I was like, well, cryptocurrency, of course. But then it occurred to me it might not be polite to go on his podcast and hijack it and tell him all the reasons why we think he's doing things wrong with cryptocurrency. So Matt was gracious enough to come on our podcast, and I had this crazy idea. And dear viewer, I'd really be interested if this is something you like. I thought it might be fun to periodically have advisors on our podcast who are crypto curious or crypto skeptical. And Matt, I did end up hijacking the conversation towards the tail end of his podcast, but Matt still agreed to come on, and here we are. So we're gonna have a fun conversation. I'd love to kind of get into kind of some of the nuances and maybe some of what might make you skeptical around crypto. But before we get started, we always like to start with an icebreaker question. So Matt,
please.
I'm going to start with you.
Okay.
Pistachios, shelled or unshelled?
Ooh, boy, that's a good one. It depends on what I'm in the mood for. Sometimes I like them shelled so I can slows me down a little bit. But if I'm in the car, I guess that'd be the answer. If I'm in the car, unshelled. If I'm at home, shelled.
All right, that's acceptable. I think we can keep him on as a guest.
Now, then again, I live in Nevada, and we watch all of our water go through Nevada to California to grow all of the pistachios. So, I have a conflict of interest there. I probably should be like no pistachios, but anyway.
Jeff, what about you?
Yeah, I'm without the shell, or shell on, so I can kind of take them off as I eat them. Like you're saying,
Pace
that kind of
yourself.
slows me down. But the thing is,
Yep.
I'll get like a separate bag to put all the shells in, and by the time I'm done, the bag is full of all the shells. I'm not really sure if it slows me down or just takes me longer to eat the whole bag. But either way,
I'm so relieved that both of you said shelled, because I don't know what psychopath. I mean, with shell, I don't know what kind of psychopath eats pistachio shelled. Like I can envision a couple of use cases. You just pointed out a very good one, Matt. The only other one I could think of is like maybe in trail mix, but
Sure. A salad. Do you put pistachios on salad, I guess?
Sure. There's a third. Okay. All right. You're
Sure,
whittling
but
down
yeah,
my
I'm with you.
argument.
Yeah,
But-
savages otherwise.
Hello, and welcome to Map Your Money, a finance-focused podcast. We exist to simplify the lives of our clients and listeners and to help individuals create the roadmap for their financial future. Calls are pre-screened and the content was pre-recorded. Please note that the content presented is for educational purposes only. We encourage you to consult a financial advisor or conduct your own due diligence before making any investment decisions. All information provided is believed to be reliable but is not guaranteed for accuracy or completeness. This presentation does not constitute investment, legal, or tax advice, nor an offer to buy or sell any security or insurance product. It also does not endorse any third party or their views. All examples are hypothetical and for illustrative purposes only.
All right, getting down to business. So Matt, we had a conversation on your show, and we kind of got into an advisor's perspective and some of our biases, but I'd really be curious to hear from you. If you think about, and when I say cryptocurrency, let's just think we're talking Bitcoin and Ethereum in particular. Yeah. So take the rest of, of the various cryptocurrencies, use cases, all of that aside.
Yeah.
What doubts or what concerns do you have about putting a small allocation in a client portfolio?
Yeah, that's a great question. Let me first confess that every prediction I've made about the future of Bitcoin prices has been wrong. Like, I just want to be full. This isn't making my case for your listeners. Just full transparency.
Did you just invest a lot of money in it?
No, no, I still zero holdings.
I don't know if you've been paying attention,
holdings.
but it's been a pretty bad couple of weeks.
Yeah, I remember. I have a distinct memory. I was giving a presentation for DECA, which is the High School Entrepreneurs Club, And we were talking about investing for this DECA group. And this girl says, well, my dad and I, we put money in Bitcoin and it's currently at 6,000. What do you think I should do? And I said, sell the dang thing because it's garbage. Like it can't turn into anything. So hopefully she didn't follow that advice. Or she might be like, that was that guy, I'm going to find him. So I like to put that disclaimer out there because my crystal ball is as broken as anyone else's. And so I don't want to come on here and act like, boy, I know what the future is going to be. I have some pretty deep held beliefs, though I like that cryptocurrency or crypto curious phrase. I'm always curious to learn more. So, but I guess short answer is I don't have an allocation currently personally or for clients.
Right. And that's exactly why we want to have this conversation with you, because, and I want to maybe throw the caveat in there that we're looking at this from a financial advisor's perspective. So this is not a trader. This isn't, this going to go up tomorrow or next week or next month or even next year? This is as part of a long-term allocation, as something that you're going to hold for the next 5 or 10 years and rebalance into or out of. And don't be shy. Be like, well, here's what I don't understand, or here's why you're wrong, Jaime. Like, what do you like?
Why don't I have an allocation? Sure.
Yeah. What are the concerns that cross your mind?
Sure. And I've done
let's maybe I'll narrow this even further.
Yeah, please.
Let's take client behavior out of the picture, right?
Sure.
This is for your own money.
Yeah. So, and I've read several books on the subject as well. So like, I'm not just coming out of like nowhere land. One of my core investment philosophies is I don't buy anything where I have to be right on price twice. Now, somebody could say, well, wait a second, equities are the same thing. And maybe this is a false distinction in my mind, right? But when I buy equities, I'm buying them because I assume that the innovation is going to continue, that the world's greatest companies on average will continue coming out with newer and better things. That's been the track record for a long time. I don't, for example, buy commodities, right? Because it requires me being right about price twice. I just don't play that game. And in my mind, and we can talk about this, Bitcoin, we'll use that as a placeholder for crypto. Bitcoin falls in that commodity space where it's a speculation on the future value of the price. Maybe a utility value will emerge. We've been waiting a long time for that. If one does, I'm not sure what that will do for price either, but that's really my hesitation, Jaime, is that I'd have to be right about the price twice, and I don't like that bet. If I buy equities, I just have to wait. I know they're going to go up. Hundreds of years of history. It's time, not timing.
Okay. So do you subscribe to the theory, Matthew, that it's kind of like a pet rock? I've heard some people kind of calling it that, right? It's the digital equivalent of a pet rock, where there's not really a lot of underlying value unless you can just sell it to the next dupe. That's kind of how some of those people think of it.
Yeah, sure. Like the greater fool theory.
Yeah.
Yeah, the tulip mania. I feel like those are overly simplified, right? Because it's got so much more momentum than anything like that before, right? Which puts it in a unique space, right? Like people say, oh, like Beanie Babies. Well, hang on a second. Like that was a pretty obscure corner of one small subset of people. You're looking at what's the market cap of Bitcoin right now? A couple $1 trillion. Like it's some insane. This isn't just a flash in the pan.
Yeah, but back to your analogy with commodities, I don't think that that's completely out of line to kind of put it in that commodity bucket. But I also don't. I think that's only a partial picture. And so, if I could make an argument,
please,
that there are a lot of fundamental reasons why the price of this thing should continue to go up, that there are genuine use cases already, and that there will only be more as time goes on. I mean, would that if, assuming I could do that, would that appease this one concern? And the assumption is you probably have more.
Yeah, I probably do. I'd be certainly interested. My smart Alex side's like utility value beyond gambling and illicit activities. But yeah, no. It'd be interesting because that was kind of the premise of it, right?
Those are, don't hold back on. I want to hear the smart Alex side, because those are a lot of the misconceptions, and if we're not able to address them, like that's what a lot of advisors are thinking. So,
and I'm excited for this conversation because, when the masses are doing something, I'm really not that interested in what the masses are doing. Like we can almost just bet that the masses are wrong. But when people I otherwise respect and are very smart people, which includes the two of you, and you say, hey, I think this makes sense, that always causes me to step back and wait a second. If people that I know and respect think something makes sense, I'm probably missing a piece of the equation. So please help me with utility value.
Well, so let's kind of start with this idea of what is money, right?
Sure.
So money is three things. It's a store of value, a
Mhm.
unit of account, and a medium of exchange. I would argue that right now Bitcoin is only one of those things. It's not the other two. So
Correct. I would agree.
I don't think Bitcoin is doing a good job right now acting as money. That doesn't mean it won't become money in the future. I actually think that's very likely. I don't know how far out that is. It could be 10 years. It could be 100 years. But I do think it has been acting as a store of value for a long time, albeit a very volatile one.
Very volatile one, sure.
And if you look at the way it's behaving now, it's akin, the analogy you hear is a lot is it's digital gold, right? And this is why the reason gold has been used to back currency is that and the US dollar is not backed by gold at the moment. I mean, we do have gold in the Federal Reserve, but it's not like you can take your dollars and redeem them for gold.
No, yeah.
There was a time you could do that, but that's not the case anymore.
Correct.
At the same time, banks hold gold because it has scarcity. Gold is, oh God, Jeff, you know this more than I do, but the stock to flow ratio of a commodity is essentially like if the value of gold were to go through the roof, you still could not go out and mine enough gold quickly enough to really affect the value. So like all the gold we have today is kind of like all the gold we've ever had in history, and we're adding to it slowly, but it's not like if we were using seashells, where like if we were using seashells to back
or grain or alcohol or
the supply is very inelastic to price.
Yes. Yeah, that would be the economic term, right? Yeah.
Exactly. So Bitcoin is another level of that. If you think about what Bitcoin is, it has enforced scarcity. So it's programmatically enforced. There will only ever be 21 million Bitcoin. It's decentralized, meaning it's run by computers all over the world. So, for a long period of time, you'd hear this argument that like, if it gets too popular, the government will not allow you to do it. Like even Ray Dalio was saying that. But if you think about that, governments can restrict their population from having access to it, but they can't turn it off. And even then,
well, for sure,
they can still get access.
It's like Swiss bank accounts, right? Like the U.S. government didn't shut down Swiss bank accounts. They just said, "Great news! If you have a Swiss bank account, we find out you'll go to jail." Right? So, but they effectively shut down Swiss bank accounts, right?
I mean, China tried to do it.
China tried to, yeah. Which China's an interesting thing on its own. Yeah.
But the point here is that you can't actually turn it off. Like to turn it off,
no, you couldn't like make it go dark.
You'd have to turn the internet off all over the world, right? Because what's happening is every instance of the Bitcoin ledger is running on computers all over the world, and they all communicate and verify every transaction, right? So it's completely decentralized.
It's genius.
It also means that it's not controlled by any government or central bank.
For better and worse, but yeah.
Correct, for better and worse. If you want an intermediary, you could argue that that's worse. Assuming you don't want an intermediary, it's a good thing because it cannot be devalued. Nobody can say, let's bump it from 21 million to 23 million.
For sure.
And it's also very inexpensive to transact. So like we know those are the characteristics of Bitcoin. Let's talk about why, what the use cases are. And I think this is something that is really difficult for Americans in particular to understand because we're in such a privileged position. The average American is going to go, I've got Venmo, I've got PayPal, I've got Zelle.
I've got 6 credit cards. Yeah.
Yeah. What do I need Bitcoin for? I can transact electronically all I want. What we don't think about is you're in such a privileged position for 2 reasons. 1, you are banked. You have access to the banking system. And 2, you're on the US dollar. Now, I don't know exactly what the stats are, but that's that's close to 50% of humans in the world do not have those 2 things. Right? So
yeah, it's got to be less when you access to US dollar, but yeah, go ahead. Yeah.
But so if you think about someone who grows up, let's say in a country where there is monetary instability, right? You grow up in Venezuela or in Argentina and the currency is mismanaged. Bitcoin is going to make sense to you because you have seen generational wealth destroyed in years, right?
I mean, and really anywhere outside of North America and Western Europe, right? Like anywhere outside of those countries have within the last generation seen collapse of their currencies, right? right? I mean, the Mexico peso crisis was what, in the 90s, the late 80s? Like, that's not that long ago. Go ahead, please.
Well, and here's what's really interesting. If you think about, if you're rich in those countries, where do you store your wealth? You
U.S. dollars,
buy
U.S.
real
equity,
estate, or you buy U.S. bonds, and you don't care if they're paying zero. If they just hold their value, you're in great shape. But if you're poor in those countries, you don't have access to either of those things, and that means that you don't even have the ability to take your week's earnings or your month's earnings and store a portion of it and have it hold its value a month or 2 months or a year later, right? So that's use case number one all over the world, and we're seeing it. We're seeing it in places.
Are we seeing it though? Like when I travel to, I don't call it third world countries. That's not the terminology. Countries without stable currency. They're typically all on cell phones, and they're using.
And you can say third world country. It does not offend me.
Yeah. And I traveled around a little bit. You're right. They're all. Well, you would know better than I would. Then they're all on cell phones, using cell phone apps, exchanging in a lot of those same things, or they're using U.S. dollars on the black market, which has its own problems. And doesn't have necessarily the technical limitations that we've seen in Bitcoin, which may be solved. Like you said, in a few years, that might be a non-issue. Bitcoin might be as easy to use as a cell phone app, or you're doing money transfers in WhatsApp.
So how many of those things can be turned on and off with a switch, though, right?
What do you mean?
Versus Bitcoin. Well, I mean, like, if you have like an app on your phone where you're transacting with different, bank accounts, usually there's some kind of government involvement, whether that be China or whether it's even U.S. involvement that can put sanctions on that activity.
I meant that China turned off Bitcoin in China. Like, if you get caught with Bitcoin on your phone in China, you're gonna go to jail. Like, sure the ledgers are still going. The servers are still going.
I don't know what the legality of it is there now. I'd have to look because it's changed. I know.
Yeah. I think it was in 2021.
I don't think it's illegal to own it. I think it's illegal to like run a Bitcoin exchange in China.
We'll have to check that. I'll call his sister-in-law who's Chinese. I'll call her and ask her.
We can
we'll
ask
save that for the
ChatGPT.
next episode. Yeah.
but that's another.
Sure, go ahead.
That's another use case itself. Like if you're in an authoritarian regime, like there's
for sure.
And you need to flee the country. Like China's a perfect example.
For sure.
They can shut your account down at any minute, right? You hold some Bitcoin, you can leave China with that cryptographic key memorized, get to another country and have access to your wealth.
For sure.
And there's countless stories of that actually from the war in Ukraine where people converted their assets to cryptocurrencies, fled, and then started a new life somewhere else. So I actually do think that there is a tremendous use case. We're seeing it. Now, you do have to be pretty technically adept to do this right now. But ultimately, this isn't any different from the internet. When you think about the early days of the internet in the 90s, when you were on a dial-up modem and it was really just geeks in a chat room, like doing geeky things, and nobody could even envision the use cases for it. But what happens is all of that technical stuff gets obscured away. And the same thing is happening with Bitcoin. I mean, the apps are getting easier, the interfaces are getting easier. We're not there yet. But I would also make the case that at this point, we're past the tipping point. There's enough people that believe it has value, that it actually has value. And that's not a lot different than the dollar if you think about it. Like, what's backing the dollar? The full faith and credit of the United States. But
for sure.
You can make the case that that's eroding. I'm not one to say that the dollar is going to collapse tomorrow. I don't know if you've watched any of like Ray Dalio's videos about the rise and fall of empires. And the difficult thing there is that's hard to time, right? So I think he is directionally correct that sooner or later, whatever the world reserve currency is changes. It's changed dozens of times already.
It's inevitable.
But is it going to be in the next 10 years or the next 100 years? Who knows?
Yeah. It reminds me of that Warren Buffett quote where he talked about, like, I'm gonna get it wrong, but he says, I'm not sure if the currency of the future will be shark teeth or pieces of paper that we've written notes on, similar to the US dollar, but whatever it is, people will trade a unit of value for a bottle of Coca-Cola, right? So that was kind of his, like, I really don't care what currencies are, I own equities. So it brings an interesting question, Jaime, about what are we comparing Bitcoin to? So if we're comparing it to the US dollar, that's different than if we're comparing it to equities, or are you kind of thinking it exists in its own world Not that those are the only two asset classes, but does it, for you, exist in its own world? Is it comparable to the dollar, which is different use case than comparable to equities, U.S. equities?
I think it has characteristics of both.
Interesting.
And I think over the long term, it is going to migrate more towards something like the dollar. But again, what is long term? It could be 100 years. Because what you can see very clearly with Bitcoin is that it's gone from very speculative to now very volatile. And as you see more and more adoption, that volatility is going to continue to go down and continue to go down. The price is going to increase, but you're not going to see, like, you will never see the returns you saw 10 years ago from Bitcoin again. So this is Jaime here, cutting away from the main podcast for a second because our compliance team stepped in and flagged a portion of this conversation and essentially said, you can't say that, that it is a promissory statement. So I need to come in and essentially rephrase that portion and explain the point we're trying to make. And our thesis is that as adoption increases, we believe the price of Bitcoin will continue to rise. And it's a basic economic principle of supply and demand. If you have a fixed supply of something and the demand increases, you would expect the price to rise. Bitcoin has a fixed supply of 21 million Bitcoin. We believe that adoption will increase over time, not decrease. We think more people will be using this in the future, not less. And hence, that's why we believe the price of Bitcoin will rise. Because this kind of leads to...
couldn't you make the case that as the volatility goes down, the price will go down as well? Like returns will stop. For example, if we compare bonds to equities, right? Traditionally, bonds have a lower volatility, but also lower returns. I mean, isn't there a case to be made that the further utilization of Bitcoin could, in fact, lower the price because all the speculators come out?
I would say it will lower the growth in price. But we have a long way to go before Bitcoin reaches the volatility of a bond. But
interesting.
But your price question, I think you got to go a little deeper on that, right?
Please.
If you think about Bitcoin, do you feel like there's going to be more adoption or less adoption in 5 years?
That's an interesting one. I mean, on the one hand, you would say more because it'll be easier to access. On the other hand, you're up against some pretty competitive market forces. Like Visa's not going to roll over on Bitcoin, right? Like Zelle's not going to roll over on Bitcoin and say, well, you know what, or Apple, right?
We'll come back to those because I think you're making my point. You're making my point for me with those examples.
Yeah.
But I would argue that adoption is going to only increase. And whether it's because the technology gets simpler or just because more people learn about it, like you think about, I don't know, 3 years ago even, the thought of a public corporation putting Bitcoin in their treasury was like, you were really putting yourself out there. It was Michael Saylor and Elon Musk, I think, and that was it. Now,
because you were still worried then it was going to be illegal, right? Like it's the first currency that hasn't just been outright shut down. And that's a whole interesting discussion. So yeah, to your point 3 years ago, it was like, well, this thing, will everybody go to jail for this, right? Like, so it has come a long ways from a legal standpoint.
I think it was a matter of like, doing what's right for your shareholders, whether or not buying Bitcoin and put it on your balance sheet was actually maximizing the value you're bringing to your shareholders as far as like, what the standard that a board of directors has to work on.
That's interesting. Yeah.
But I would make the case that adoption is going to increase. And that's what we've seen from the start, that you're going to see more and more people start to use it. And typically adoption increases with price. So what you see is like, as you go through a crypto bull market, that piques everybody's interest in it. Then you get new adopters and it kind of drives the price up. You get a speculative bubble and then it crashes again. And then we kind of go through that same cycle again. And as prices go up again, now, more people get interested in it. But assuming that that's true, and you may disagree with that assumption, but I think you can make a really compelling case that over time, we're going to transact in this more and not less.
Interesting.
There's only 21 million and there will only ever be 21 million. So if you've got more people transacting in it, it's only, I mean, I've seen analyses done comparing Bitcoin to gold, right? If you look at the market cap of gold, if Bitcoin simply took some of gold's use case away, what would the price be? And that's where you get some of these very like sophisticated price predictions. So it's Jaime again. We've reached another point in the podcast where compliance flagged it and said you can't say it that way. So here's me trying to articulate it a little bit more clearly. The point we were trying to make is that because Bitcoin has a fixed supply, you can extrapolate price targets based on different levels of adoption. And while Bitcoin adoption has increased significantly over the past 10 years, it's still relatively low. It's estimated that about 4% of the population currently owns Bitcoin, right? If you compare that to the population that owns gold, you look at the market cap of gold right now, as of the date of this podcast, it's 20.7 trillion. The market cap of Bitcoin is about 1.7 trillion. So that means the market cap of gold is 12 times bigger than the market cap of Bitcoin. And what we've seen is adoption of Bitcoin continually increasing since its invention. We believe this will continue as the technology becomes easier to use and as more people become aware of it. So as adoption increases, it's likely that Bitcoin will eat into gold's market cap. We believe that investors who allocate a portion of their portfolio to gold will shift some of that allocation to Bitcoin over time. We're already beginning to see this among institutional investors because, frankly, from a store of value perspective, Bitcoin does all the things gold does, but it does them better. You don't have the high carrying cost to own it. It's more easily subdivided, and it's much easier to transact in. If you think about what we use gold for, people are using Bitcoin for the exact same thing, and it doesn't cost all this money to store it and to protect it and to, transport it. But there's a lot of other places people store wealth, particularly rich people abroad. Another one is real estate. You think about how many foreigners buy real estate in the United States just to store their wealth in it. Well, there's a lot. I mean, real estate, it's a great asset class, but it's also kind of a giant pain, right? You got to pay taxes on it. You got to maintain it.
Huge carrying cost. Yeah.
What if just some of that market cap went to Bitcoin? So there's a lot of reasons we think that usage is going to increase. One of the ones you mentioned was the competition from Zelle and from Visa and from all these places. So I'll give you another use case for Bitcoin where it is being used, and that's remittances. So you think about all the immigrants in the United States that work in a restaurant, and then they take their money and they send it home to, you name the Central or South American country. Sure. How do they do it most of the time? Western Union. And you talk about a racket. Like they're going to take anywhere from 8 to 12%, and it's going to take, 3, 4, 5 days to get there. With Bitcoin, they can send it virtually for free. They can convert their dollars to Bitcoin, send it to someone, and it'll be there in 15 minutes. And then they can convert it back into their local currency. I mean, that's another use case that, again, right now you have to be pretty technically savvy to do that, but all of that's being obscured away. You're seeing, I think Square, I haven't kept up with this recently, but there's a lot of like existing fintech apps that are like common ones, not startups that are starting to incorporate like pay in Bitcoin, convert to Bitcoin. I mean, Robinhood's doing it. I want to say PayPal as well.
Probably, yeah.
So what else? I don't know if I've convinced
Jamie,
you, but
we talked about some of the volatility, right, of Bitcoin and how we expect that to change. I mean, I think your comments on how people view it as an alternative to gold is interesting because over time, that's expected to change the composition of who owns and transacts in Bitcoin. So like right now, if you think of kind of like a long-term holder versus a short-term holder or a trader, kind of like a mutual fund investor versus like a hedge fund investor in equities. If you have more of the short-term traders, let's say 90% of the volume, then that's going to create a lot of the swings in Bitcoin. But as you have more and more people adopt it as kind of a long-term strategic asset allocation within a retail portfolio or within an endowment or within a central bank's balance sheet, then you have a lot less trading in the overall activity, and the overall stock doesn't trade as much. So it creates a lot less downside, resistance. But then you still have some of that buying power coming in, chasing fewer and fewer newly created Bitcoins because of all the happenings that we've had, right? And so I think, Jamie, isn't that a point that, like the CIO of Bitwise has made, that over time, the composition of who owns Bitcoin is going to be more of these long-term holders. And so there won't be as much of this volatility associated with the asset class. And that's why we are seeing the volatility steadily decline over the last couple of years.
Yeah, it's an interesting thing because any of these variables could push it either way. So we're talking about remittances as an example, right? Those are typically low dollar issues right now, right? It's somebody's got extra $100, $200. They could WhatsApp it right now. They could Western Union. I'd have to go pull the stats on see what Western Union stats are these days. That used to be horrific. But if I'm remitting $100 or $200 to my family, I don't know that I could tolerate the volatility, right? Of I sent $100 to my family to buy their groceries, and later that day it was $70, and now they can't buy their groceries. So I wonder how so many of these issues could swing either way. Same with as it becomes more mainstreamed, it will become more regulated, not the coin itself, but the coming in and out of the financial system. And so if you remove illicit activity, which is hard to know what that is, though the FBI said last year they had 69,000 reported cases of fraud with Bitcoin itself, which is an interesting thing. But it's always interesting to say, which way will these swing it, right? Will endowments buying it, will they be involved with it? Will that slow down the volatility? Will that pick it up? Will it be like PE firms coming in and it'll drive up the valuations? So many of these things like we've never seen before. Like we haven't seen a new currency be adapted in I guess the euro in the 90s, but that really wasn't even a new currency. That was like, let's take these and combine them together. So it's really hard to say, will these push prices up or will everyone sort of lose interest? Like maybe the volume and the volatility is all speculators and illicit activities. And when it becomes mainstream, it'll get boring and it'll quit pushing the price up. So it's a lot of speculation in my mind.
I think it will get boring when it becomes mainstream, but by that point, you think about what it means to become mainstream. I mean, what percentage of the population owns Bitcoin right now? I don't know. So this is Jaime here again. There's one last place in this podcast that our compliance team flagged, and they didn't like the way we articulated something. And the point we're trying to make here is the same point earlier in the podcast about supply and demand, where if you have a fixed supply of a good or service, as demand increases, you would expect the price of that good or service to increase as well. It's a basic principle of economics. And the supply of Bitcoin is capped at 21 million. There will never be any more. As we mentioned previously, approximately 4% of the population currently owns Bitcoin. And by definition, if we ever reached mainstream adoption, it would be a much, much larger percentage of the world's population owning Bitcoin. And hence the demand for those same 21 million Bitcoin would be much higher. In that scenario, you would also expect the price to be much higher than it is today.
Yeah, but why would most people own it, right? So we're saying the value, if you're exposed to the US dollar, so that's like 90% of the economy. So it's probably only like 30% of the world's population, like 90% of the economic value of the world has access to the US dollar. Maybe it's 70%. It's a big number. So you don't have a need for Bitcoin unless you're trying to do illicit activities, but that won't last forever. Or if you're speculating.
Let me stop you there though, because the illicit activity piece, I think is another,
please.
It's a real misunderstanding. I don't have these stats handy, but if you look at the amount of illicit activity in cash versus Bitcoin, it's like not even close. Like,
I'm sure, because there's so much more cash in circulation. Oh, for sure.
And I would also make the case that if you are doing illicit activity in Bitcoin, which is part of what got Bitcoin popular early on in the early days with the Silk Road, it's not a very smart thing to do because it's infinitely traceable. Like all of these
which is the opposite of one of the original value stack, right? Like one of the original value stack was, hey, because it's not regulated, it's untraceable. And then they're like, well, wait a second, it is actually traceable. We just didn't think that somebody could track the ledger
to the underlying wallet ID, right, Jamie? But that's all anonymous.
Well, so hey,
hasn't stopped the FBI.
We're muddying a couple things here.
Yeah, we are muddying a few things together. Yeah,
but I don't think that being untraceable was part of the initial value proposition. It was being immutable. And the fact that and sovereign, meaning a government can't turn it off, right?
Yeah.
That continues to be the case. It's not untraceable. People had that fallacy probably because they didn't because nobody uses it. And they're like, what does this transaction ID mean?
Yeah.
What's a wallet address?
Nobody cared to look,
but
right?
The truth is, every transaction on Bitcoin is recorded forever on the blockchain. And there've been a lot of crimes that have been solved because they were transacted in Bitcoin, including what happened with the Silk Road. But there's been that's not it. If you're looking to do something illicit, Bitcoin is not the way you want to do it. Granted, there are ways to take Bitcoin and other cryptocurrencies and mix them. In other words, you take them and put them into a mixer where the whole idea is that they're anonymizing it. Everybody puts their money in, they mix it around, everybody gets money back, but you don't know if those exist.
Until the RICO clause shuts down the whole thing,
Those exist, but you can still trace everything that went in and everything that went out of that mixer, So ultimately, given enough time and enough information, it is possible to connect the dots.
Yeah. Yeah. Enough money at stake, right? Jeff, to your point, that tracks back to the wallets. I think the FBI did one like a couple years ago. This is a side tangent I thought was interesting. Some guy had managed to steal from Silk Road what was now like $5 billion of Bitcoin. And it was in like a shoebox under the floor of his house. And they eventually figured out who it was and came and got it. But I thought, what would it be like to have $5 billion in your basement, in your mom's basement, right? Then one day the FBI shows up.
Well, is that because
we're
they
on
can
an
track
old
each
laptop that
underlying
you threw away.
Is it like they can track the underlying Bitcoin, Jamie? So like in this
They
case,
track the
they knew
transition
which
to the
Bitcoins
wallet.
were-
Yeah, and then they watched for that wallet to get used somewhere else. It's sort of
Yeah.
like
Okay.
if I use my cell phone, like it's being geotagged, and so they're like, oh, this guy comes here and robs this place. Well, January 6th, not to get really deep into politics, a lot of the people that were arrested on January 6th for those protests, it was because their cell phone pinged in the vicinity of the Capitol. Anyway,
Yeah, like
whole-
proving
so
they
they
were
just-
like there, right?
Yeah. So if you really want to get deep in this, like if you have a burner phone, you should never put it next to your real phone because they'll watch for them both to ping in the same location. They'll say, oh, this burner phone that's doing like illegal activity always pings next to Matt Jarvis's regular phone. I wonder if this is Matt's burner phone. So the tracking is phenomenal, but that's a whole side tangent. I apologize.
But they're probably
that
not allowed
sounds
to
like-
use that unless they have like what video evidence. No. We're going
Sure,
too far. We're going, it's turned into like a legal podcast.
Only if it's like a
now.
real crime. Only if it's like a national security or something.
No, they have to have the reasonable suspicion, right?
They'd have to have a
Come on.
warrant for that, right? Yeah. Sorry, we got
Well,
side tangent. You were making the case for unregulated currencies right now, Jeff. You and I were like, wait a second, ditch
Well,
the dollar. Give me a
people
break.
listening be like, is there an asset where I can put my money where nobody can just shut off and I can access it, wherever? If that kind of asset ever, became so mainstream that it maintained its value over time, then man, that might attract a lot of interest.
Well, but
Yeah,
but think
assuming
about-
it stays that kind of asset. Go ahead, Jaime,
Think about
please.
the institutional adoption that we're seeing right now.
That's an interesting one.
And the sovereign adoption that we're seeing, right? So right now we've got, I think there's, in addition to the United States, there's 2 countries that hold Bitcoin. It's El Salvador, and then there's a country in Central Africa, right? But the United States has just said they're going to have a strategic Bitcoin reserve. And the idea is that these are Bitcoin that have been seized, and they're just going to hold it as a reserve asset, just like they do gold. Do you think it's likely that, now that's not to say that another president couldn't come in and undo that, but
Yeah, in fact, the U.S. government is probably already one of the largest single holders of Bitcoin because they haven't figured out what to do with all these seized coins. Anyway, it's interesting to see what institutional investors are doing, right? And I think that's a two-edged thing as well because like institutional investors were all aboard mortgage-backed securities and that didn't end so well, or tech IPOs, that didn't end so well. So I always want to separate out like what's chasing profits versus a move.
These are also
is
huge
interesting. Go,
portfolios,
please, Jeff.
right? I mean, like these are huge portfolios, so they
yeah.
typically are dabbling in every area. So if you say
Everything,
they're
yeah.
in, internet IPOs or mortgage-backed securities, I kind of wonder like what composition of the portfolio was in that security, right? But I think
mortgage-backed securities was
Bitcoin-
pretty big, but go ahead.
Yeah, well, the subprime, because I mean, really a lot of those things were like just in the subprime mortgages, right? A lot of that didn't float up to some of the better mortgage-backed securities, which, by the way, are still issued and pay coupons every day.
Yeah.
So, yeah, I mean, I think that's interesting, but we are seeing some adoption. I think part of it too is, we talked about the correlation to the NASDAQ. Something that I've noticed with Bitcoin's price in particular is that if we see a growth scare, we see a beta scare in markets, it'll follow equity prices lower. But if we see a scare that's related to like the financial system or geopolitics, then it tends to have a stronger correlation to gold. So if you look at Bitcoin prices back in like March 9th of 2023, remember what was happening then?
March 9th of 2023. No, you have to refresh me. Sorry.
Silicon Valley
it's not
Bank.
a fair question.
Oh, that's right. Yeah.
Remember that? Remember that
Yeah,
when the whole
yeah.
banking system almost collapsed over a weekend and the Fed stepped in and did something. Well, you'll notice all the
back to
equities
lender of last
were
resort, yeah.
falling, rates were falling, big risk off move, but gold and Bitcoin were both going up, even though the NASDAQ was tanking, right? So I think it's interesting that as you see it evolve into that type of asset, it is becoming more common to include in your portfolios. And when you include it only at like a 1 or 2% allocation, you'll notice that the contribution to risk isn't all that much, especially if you consider some of the times when it's non-correlated. But the contribution to return is massive, especially if you hold it, 3-5 years, at least so far.
Definitely
Matt,
interesting.
we
And I
wanna
wonder,
be,
go ahead, Jaime, please.
No, finish your thought, please.
Well, I was just going to, Jeff, to your point, like, I know we've all been at this for a long time, the industry that is. Like, I mean, we all remember when everybody was having a 1 to 3% allocation to commodities, or a 1 to 3% allocation to options, or a 1 to 3% allocation to alternatives. And I feel like I've watched so many of those come and go. And Jaime, you and I talked about this on my show. That's like, that, I'll admit, that's created a bias for me of like, hey, listen, I don't want to dabble in something else. Like, I've seen these, I've been burned by enough of these being a very broad category, right? Why don't I just stick with equities and US dollar? Because for all of its flaws, it's the least bad thing the world's ever seen for a really long time. Could change tomorrow, I suppose. And at some point it will, but I just don't see a super compelling case to add that in. At least not one I want to deal with. And maybe that's my bias to your earlier point.
Our thesis is that it is a long-term buy and hold.
Sure.
And by the way, the volatility, if we rebalance along the way, it only helps us. So
it's true.
I don't know that we've convinced you, but hopefully we've moved you a little closer to the cryptocurrency
I very much enjoyed
side
it.
of things.
Yeah.
And we didn't even get a chance to talk about Ethereum, but maybe that's a conversation we can have over a beer if we're ever in the same city.
I would love to do that. Well, I hope we're going to be in Atlanta together in June, so that'll be a lot of fun. So
awesome. Well, Matt, thank you so much for coming on the podcast and for being such a good sport.
Yeah, no, thank you guys for having me, and I appreciate your conviction. And I mean, your clients are certainly blessed that you've spent this much time researching. Like, this clearly isn't something where the two of you are like, hey, you know what'd be really fun to do? Like, you guys have obviously put a ton of thought and research into this, and I think that's a huge value that your clients have that they probably don't even appreciate how much of a commitment that is. So just my hat's off to the two of you.
Well, thank you. It's a pleasure.
I think sorry, I would say this is mostly Jaime. Sorry to talk over you, Jaime, but I have to give you credit. I mean, this is something that he gained a lot of conviction of in 2022. And he was a bit early, right? It kept going down, and he stayed on his conviction and kept his neck out. And I think we did have some clients that were a little unsure at first, but after the last couple of years, they have certainly been convinced.
Well, to be continued, gentlemen.
Thank you very much, guys.
Thank you, Matt.
Thank you for listening to our podcast. Remember, the views expressed are not necessarily those of Beam Wealth Advisors. All content is for educational purposes only and should not be construed as an endorsement of any third party or their views, or as a solicitation or offer to sell securities or provide investment, tax, legal, or consulting services. We believe the information presented to be reliable, but it is not guaranteed for accuracy or completeness. Investing involves risk, including the potential loss of principal. Hypothetical returns do not reflect actual trading and may not be indicative of the performance of any specific investment. Always consult with a qualified financial advisor before making any investment decisions. Past performance is not a guarantee of future results. Additional information, including management fees and expenses, is provided on our Form ADV Part 2, available upon request or at the SEC's Investment Advisor Public Disclosure website, advisorinfo.sec.gov.